So how long can this market crash go? Where could the bottom be? And what the heck am I looking at? Well, I want to just do this, look at indicators, look at numbers and stuff with you guys. And we'll do a news video separately. But I know it's scary out there. And I just want to give you a general sense of like, okay, how far can this thing go? This is a sector map. And you guys can see pretty much everything was down today. Energy fell the most, which is pretty crazy. That's been essentially our leader, and when you have your leaders of what's been leading the market starting to take a tumble, that means like basically a general sell-off. The other thing is too is when you take a look at this, Goldman Sachs lowered their price target for the S&P to 3,600, and if you want to know where we are right now, we're actually right there. We're right at 3,693. So they're saying it'll be 3,600 by the end of the year. One of the things that I've told you guys before. There's a couple kinds of people out there at the moment. There's people on TV and stuff like that that are basically just lying to you because Goldman Sachs, for example, they have their internal numbers, but they're not sharing with people. And now they start to release numbers because their clients are like, what's going on? Are you like lying to me all this time? Yes, we are. So it's not like they didn't know, right? And I can just tell you from my friends on Wall Street, like behind closed doors, people know that the market was, going to be going down. Also, too, people on YouTube, they may not necessarily be lying. They're probably just too stupid because they essentially watch TV and that's how they get the information. And then they just copy whatever it says on TV and don't actually look at any numbers or don't know anything. And this is sort of why I show you guys this stuff. So you at least have a general sense to independently make your own decisions, which is really key. Because I'm just telling you guys, most of the times people either lie to you or just stupid. And I hate to be mean about it, but when you talk about this kind of stuff, it's very, very frustrating to watch when you're like, know that Goldman's been lying to people, and then they, oh, wait, okay, fine. I'll tell you the truth. We think 3,600 now, and that might not even be a thing. So, it's so ridiculous. So anyway, they're looking at 3,600, and we'll see. You can see here. Back in June, that was around the bottom that it hit, and we're right there right now. However, the key question I'll ask yourself is, do you think the world is better today than it was back in June? And because the Fed is raising interest rates, I would say no, the world is not better today. They raise interest rates again opposed to back in June, so I think it could go lower, is my opinion. But I can't read 100, but I can certainly read numbers that have a general sense of where we are. Yield. So the 2-year treasury is at 4.2. It is really spiking. And on top of that, I can just tell you guys, the US dollar is really strong right now. So we came to Korea as the dollar was spiking, and it keeps going up. I can just tell you, so for $1, it's like 1,422 won, which is really crazy. U.S. dollar spiking to the Japanese yen, to the British pound, to even the Chinese yuan. Almost every currency, the U.S. dollar is doing well. People are just running to dollars and to bonds. It's running to safety. And I look at a lot of things when I'm watching the market. Another one I look at is Tesla. I mean, look how ludicrous this is. This thing's trading at like a PE ratio of 99. I think forward PE is like in the 60s or something like that. But this is basically the thing you want to look at. When you look at a company and you look at their PE, ask yourself, is the growth of their earnings greater than the PE? So in this situation, let's say your PE year to date is 99. That means like, okay, so I think the stock's going to double. See how ludicrous that sounds within a year or so, right? And forward PE, even if let's say it's 60s or 70s, just in that range, that means like, okay, so I believe then that the stock is going to, 70% their earnings next year. And going into recession, that's just ludicrous. Also, too, even their like craziest optimistic projections over at Tesla, they think, hey, we're going to do 50% every year, but I'm just not seeing it. So that's why it doesn't mean the stock can't go up. It just, because remember, stocks also go up because people want to buy things, and things can be in a bubble, right? But I'm talking about actual worth, right? So worth and what the stock trades are two different things, because remember, in the short term, stocks are a voting machine, but in the long term, it's a weighing machine. How much is something worth, right? So first it can be popularity, which Tesla's a popular stock. Then it can also be how much it's worth. So to me, I've never gotten into this thing because I just think like it's just not worth it. Now Nvidia is another one that I watch. Again, you got a PE of 41 here. I haven't checked the forward PE one. I just haven't checked. But basically, you want to know the reason why I'm bringing up Nvidia, because this is a solid company. They make money, right? But even if companies make money, you can certainly overpay for them, and this is something that I think it's really hurt a lot of people is that I would never say Nvidia's a bad company. It's a great company, but you can overpay the same way that, hey, there's this house on the corner. I think it's a beautiful house, and you're like, oh, how much is it? And I'm like, $55 million, and you're like, whoa, 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 whoa. Okay, I like the house, but $55 million is just too much. And so you need to tune yourself to this kind of thinking of like, okay, I like Tesla, I like Nvidia, but it's just too much. I don't want to pay that much. And that's sort of what you got to think your mind of it is the same way that you think about houses. You want to find bargains out there. And so when I look at P's of like in the 40s, we're going to recession. I'm like, come on, are you being serious here? So that's why it seems like there could be no bottom. And also to be fair, we could check the forward P's of all these. And if you don't understand forward P, it's what are projections for the next 12 months, right? So there's trailing PE, which is these are the actual numbers that came in of the past 12 months. And then you can look at forward PE, which would be projections. Some projections are tougher, right, as you could imagine, because who can predict the future 100? But you do keep an eye on this stuff. Alibaba, this one's actually pretty scary for people who are in this thing. This was a YouTube darling for a while, and oftentimes it's pumped by, I'm just keeping it real, it's pumped by people who have never been to China, don't speak Chinese, and frankly have no idea what the heck they're talking about. And if you take a look at the PE of this thing is 38, and you're talking about an economy that is not growing like it used to be. I mean, in the past, sure, China had double-digit growth, right? But the growth is slowing, and we might be looking at maybe 3% growth, something like that. And so, if your GDP is like 3% and everything's on lockdown, et cetera, what do you think your companies are going to do? You think they're going to grow? Probably not, right? And especially, do you think Alibaba's earnings would grow by 40%? Probably not. It does look scary though. So also to be fair, maybe this is the bottom. It hit this before. And we're going to see. So like I said, to be fair, this could be theoretically, but I mean, for me personally, the Chinese equities are really, really risky. And I'm just telling you the counter argument, because the counter argument is, when things get scary and no one wants to touch it, like for example, we're worried that there could be sanctions on Chinese companies and Chinese equities because they're supporting the war in Russia. And that's in the situation of like, if Russia essentially, just be for real, uses nuclear weapons and China still supports Russia, I'm sure we would completely sanction the crap out of China and just not do business with them. At least try. And I say try because we're so tied to them. But the Congress even had the banks come in and say, hey, if that kind of scenario happens, would you pull out China? And they say, yes, we would. And they're testifying in front of Congress. So, the government's already preparing for that kind of thing, and they're scared there. So, like I said, and Alibaba is a profitable company, but to me, the risks are just too high. I don't know what the Chinese government's doing, et cetera. But yes, it is a profitable company, and yes, this is very low. But we'll see. I mean, this was the bottom before for this thing, and we'll see if it keeps going. But when I see a PE of 38, you could still argue it's still too high. The other one that I look at is like, what the heck is Bitcoin doing? To me, Bitcoin is worthless. I get it. Some people love this stuff, but that's one of the key indicators out there is, when is this crypto craze finally going to end? When is people going to be like, you know what? I just want dollars. I want out of this fake money stuff. Forget about it. And I'll be watching that kind of thing. You could argue, you could watch Coinbase, you could watch your Robinhoods, all these kind of like sort of bubbly assets that represent the era that we were in. You can keep an eye on this stuff and just giving ideas of stuff that I look at. I watch Apple, right? Apple is a solid company. They make money. But there's going to be a slowdown in a recession. Are people going to be buying your $1,000 phones, right? Where's the money going to be coming from for Apple? And if you want to get a general sense of where Apple is, and like I said, Apple's a great company. I'm never going to say, and I have all Apple products in my house, so it doesn't mean I want to overpay for Apple. I don't want to pay $5,000 for a phone. And this is sort of why I emphasize these sort of prices, is because if you learn to just read your basic P ratio, just your basic thing, right? What's the price of a stock or the earnings? You'll get a better sense of, okay, I get it, right? We're not talking about is the quality of the phone good or not. We're talking about just, do I want to overpay? The same way if you went to a store and someone said, hey, Apple is $5,000, do you want to buy it? And you're like, hell no, it's too much. And so one of the things that I'm looking at here with Apple, I'm reading a PE of 25.28 here on this chart. And you can see in the past, say back to 2016, Apple would trade at like a 10 PE, right? And so, we're like double what they were in 2016. And could you say, is Apple, worth twice as much in terms of their profitability compared to 2016? You could probably say, yeah, okay, maybe. And then you could go back to say 2019. It was around 14, 15, something like that. You want to ask yourself sort of like where where's Apple going to trade? And we're trading a little bit higher than normal, right? So wherever you could define what normal is, and this is where for me mid-teens maybe it might be normal, but it's really hard to say, guys. And this is sort of why this one's one of the key indicators, because Apple represents tech and also represents consumers. And I would say at least low 20s is where I'm starting to get interested. But these are the kind of companies where at least you're probably not going to lose all your money. You're probably going to be okay. But keep an eye on this stuff, because you may also make the case the bottom of the 2020. Everyone have a different one, but I think Apple, as long as Apple holds, the market will hold. But if Apple comes out with some sort of report that says, you know what, our supply chain is horrible in China, we're not going to build any phones, or the government says, you know what, you can't use any Chinese parts, so you're not going to build any phones, something like that. So that's why you always keep an eye on Apple. But yes, they have money; they're not going anywhere. Just that you could argue that's a little bit expensive according to traditional PEs, right? So keep an eye on these things. If you want to get like more, really overtly obvious numbers, you can watch the Shiller PE. It's at 27. I've said at least mid 20s, and it starts to get interesting. The mean and the median on this thing is what you can see the 17 around. If you just want to look at the regular S&P PE, we're currently trading at 18.66. The mean is 15.98. So you can see we're still trading above the trend line, but you're getting to where it's at least getting interesting. And so that's where you can make the case to where Goldman might be looking at the same thing and be like, okay, we calculate that this will hit the trend line of the market as a whole around 3,600. They're making that case, but that's certainly, at least you're not at the top, right? People say, hey Chris, where are we? At least, and I say, hey, at least you're not at the top. Because I can't tell you exactly. I can tell you what these indicators read, but I can't tell you 100 exactly, because if the recession gets bad, there could be a whole bunch of crazy stuff going on. And that's sort of why people ask themselves, okay, do I want to take a chance with stocks that could go down another 15, 20, 30%, or do I want to just put my money in bonds, which would be like guaranteed 4%, right? And big money is like, you know what? I take that guaranteed bet anytime. The Buffett indicator hasn't quite updated yet. This was indicating overvalued. As soon as it updates, we'll take a look at the new one. I'm pretty sure this will come down, and this will probably be on the upper end of equal valued or fair valued. I'm sure as we'll read that. One of the other key indicators too is I'm looking at unemployment. We're currently sitting at 3.7, and just to give you guys some general sense, and like I said, I've lived through the dot-com bubble, I lived through 2009. For young kids out there that just don't know, because they don't know, things can get really ugly. So take a look at this. So this was just to want to show you guys general sense. So we'll do this here. So this is in 2000. You could say, okay, unemployment was say 4%, and it spiked up to, in 2003, 6.3%, right? So even though the market had started to recover, right, unemployment was actually going up. This can last for quite a while, actually. So that's what I said. For kids that don't know, you don't know. It can get really bad. Let's say here in 2007, okay, it was 4.6%, right? And then, you hit the peak here of 2010, and you're hitting like 9.8% unemployment. We're not going to go to pandemic levels where it was like unemployment is like 13%. I don't think we're going to do that or anything. But we're only currently sitting at 3.6%. Unemployment going up to say 5-6% isn't outlandish when you look at in the past when say like in 2010 you had the unemployment like 9%. It's not outlandish. It can happen, and that's why I say you got to be really careful out there, and you want to make sure you got job skills that people need and that are valuable. We're in a different era right now because computers just keep getting better. They just keep getting better, and that means workers are more efficient because you don't need people anymore. You got computers, and so this is where you're going to suffer if you're not constantly upgrading your skills. I can't stress that enough. And I try to say this in like a tough love kind of way of like, yo, get skills that people want to pay you for. And it's not all rainbows out there. Now, it is true there will always be a job at it's just your basic McDonald's kind of thing for now. But eventually those are going to be shifted over to robots as well. And I get, how people are like, well, I can just drive a car or something like that, right? Well, the thing is, eventually that's going to be replaced by robots. So I do understand the Tesla-able arguments, going back to Tesla again, to where, maybe one day there's going to be robot taxis. I mean, guys, I really get it. The thing is, though, is like, when is that day going to come, and when the government's going to improve that? Because governments know, they're not stupid. They know that there's going to be so many people that are going to be out of work when technology really, really shifts to where it's going to replace all these people. And it already has been happening. So that's why it's tough to get good jobs out there, because you got to have skills that go well and beyond, what you thought that you needed. And what I mean by that is that because many people are just frankly obsolete. So take a look at customer service jobs, for example, and I always mention this because I think that's the easiest one to remember. You call people on the phone and they say, "Oh, press 1 for English, press 2 for Spanish." You guys know this. Enter your account number, then hit pound. That's on the phone. If you do it on the internet, the chat box is all computerized now, and they basically just replace people. So we're going to continue to see the replacement of people. So there's going to be a lot of unhappy people going into the future. That's the reality. We are more efficient these days, and also too, companies, because they're worried about earnings and worried about the future, they're going to make workers do more work, and this is sort of where people are getting irritated. And also to break inflation, we just can't have so many people getting paid money. That's just the reality. There's too much money in the system, and companies too are going to be reticent to want to have to pay more workers for a declining economy. So this is sort of what I'm watching. I'm watching unemployment. I'm watching all these different stocks, etc. And the last thing that which could be the real wild card is what's going to happen in Russia. That's probably the real wild card. I just don't know. And I apologize. I can't tell you what Putin's going to do. I try my best to tell you everything, but I just don't know what Putin's going to do. I don't have any security clearance. But what I will say though, because whenever Biden gives a speech on Putin, it's always spot on. The reason why is I think we have spies deeply embedded in Russia. Because of the Cold War, we just have a really good network of info. So our intelligence is always spot on. Remember, I told you guys before, it was like 3 days before Putin's speech, Biden was already talking about nuclear weapons, and it was like, what? Like, did you get some intel? And evidently he did, the same way that we knew about the troop movements and all that stuff, and even the day that they were going to attack Ukraine. So our intel is good on Russia, but it's an unpredictable situation, and hopefully this is resolved. So this may or may not be the most important catalyst of like war is over and things start to ease up. And I could certainly see the markets jump after that, because the way things look right now is just like what could possibly turn things around. However, even if the war ended, it wouldn't be like suddenly supply chains are completely fixed. It just wouldn't happen, because you got to think about all the damage in Ukraine, where it's going to take them years to rebuild, right? And this is certainly a problem. And also too, as unemployment goes up, it's not like suddenly companies are going to like just rehire everyone like immediately after the war ends. So it'll take some time. But in terms of markets react a little bit quicker than the economy. Like markets are separated from events, because markets are always forward reading, essentially, is what's going on here. So I'll do a separate news video of all the different news of the day in a minute, but I just wanted to do this first. So just give you a sense of all the stuff that I watch and why I track everything, because if you want to do well at the market, you have a general sense of where we're going, where we are, and just have some things in your mind of what you want to be looking for. So I do appreciate everyone's time. Thanks again for watching, and I'll catch you next video.